I'd like to start off, because I've got a huge variety of people working in a huge variety of areas, thank you, of investment here, to ask each of you to just sort of introduce yourselves and a little bit about the kind of investing you do, because we've got a huge range of across the board. So I'll start here and work our way down. Over to you.
Perfect. Thank you so much, Sarah. So my name is Caritta. Pleasure to meet you. I'm currently the investment manager for Spintop Ventures. I'm based in Finland, but our fund is from Sweden. So we're an early stage VC fund. We invest from pre-seed, seed, all the way to Series A. We're pretty industry agnostic. So what that means is that we can basically invest across different sectors and themes. Something that we're looking, or let's say the sweet spot in startups that we really want to invest in, is that there should be some type of an innovative SaaS business model or some type of a software focus, basically. We invest across the Nordics. We have a mandate as well to invest in Baltics, but mainly the key focus is really on the Nordics. We are already been on the market since 2010, which means that this is our fourth fund that we're right now actively investing. We closed about a year ago, 100 million fund. We have more than 200 million under assets as of right now. And actually one of the biggest exits was, I come from Finland, so I'm very, very glad to say that one of the largest exits in the region was actually from our fund, from the Small Giant Games. It's a major, big, well-known gaming industry in the Nordics. So very glad to be here today. And if there are startups, software startups in the room, we are actively currently investing.
Well, that's excellent news to start the panel with. Emil, over to you.
Thank you. So my name is Emil.
Oh.
Is it working?
No, I don't think so.
Can I borrow yours, Caritta? Thank you. So, thank you. My name is Emil. I represent Invenio Growth and also represent the corporate perspective today. So I help corporates in terms of innovation. That can be partnerships, investments, or acquisitions of specifically startups and scale-ups. And we work quite a lot with fintech throughout the years, based in Stockholm, focusing on the Nordics and Baltics, but also looking across the globe for these kind of opportunities. Thank you.
Perfect. Have you got a mic that's working?
I think so.
Okay,
yeah.
perfect.
All good. Hi, I'm Catalina Valentino. I'm CEO and co-founder of ELIXR. We're focused on early stage tech investments. Our latest portfolio includes digital twins, LiDAR technology, planning technology, really focused on the infrastructure, and so on and so forth. We're really focused on the UK markets at the moment, but also UAE seems to be a big focus for us. We're looking to open up in Dubai at some point soon, and that's me.
Thanks very much, guys. Good morning, everyone. My name is Sarah, and I am an investor with Antler. For those that don't know, Antler is a global early-stage venture capital firm. We've got quite a significant global presence. We're in 27 locations all across the world. Roots in Singapore, and over the last couple of years, we've rapidly expanded across the globe. I think our uniqueness is really centered on two things. One, the stage that we invest. So we're super, super early stage investors, but then two, the level of professionalism that's provided at that stage. So we're really institutionalizing the friends and family around, and there's various different ways that we do that, and we can kind of go into a little bit more detail throughout the conversation. And I think in terms of our investment focus, so we really have a highly diversified fund strategy. So we're investing in absolutely everything that you can imagine, fintech, obviously, but health tech, climate tech is super hot at the moment, and then again, very, very agnostic, very generalist, and really depends on the founders that we get to work with. And I guess in Europe alone, I mean, I'm based in London, but in Europe alone, we're probably the most private active early stage investor right now, and probably will be one of few investors that are going to kind of have certainly an uptick in investments over the next couple of years as well. So something to look forward to.
Thank you. So as you can see, an incredibly diverse panel, except for the fact that we have two Sarahs, which is never happened to me before on a panel. But great to see a diverse range of panelists and a diverse range of funds to talk to us today. So I am going to start off by addressing the elephant in the room, which is investment in AI companies, because throughout the fintech industry, we've generally seen quite a large dip over the last 12 months. But when you look at AI, actually there was a huge uptick in investments in any companies with AI in the name. If you were here yesterday, we talked a lot about actually how you decide whether it actually does have AI in it or whether it's a glorified spreadsheet. So you guys as investors, I wanted to ask you kind of, the first part of our panel is how How do you decide when you're making an investment, and let's take AI as a particular example, what's actually under the hood? Like, what are you looking for when you're kind of deciding whether to give a company money or not? Caritta, I'll start with you. I know you had some thoughts on AI.
Oh, perfect. Well, I think we all can agree, definitely AI is probably the fastest growing trend, which means that I would say 98, maybe 99% of the decks that really comes through our deal flow, they have AI. Or let's say they claim they do something between the AI. And I think this is what's happening right now. A lot of startups are considering and thinking that just because they put in their deck that we have AI technology or we are using AI, that makes them very attractive for the investors, and which right now is actually become kind of the opposite. Because AI in itself is not a technology per se. I mean, you can have features, you can be utilizing, of course, different features or automation tools for sure, but how to really check, or let's see, to validate whether there's really some innovative technologies around there. One key way, at least for us, is that one of the best decks I would say I actually saw came from a startup from Finland, and they develop proprietary machine learning algorithms. And they had very clearly actually written on the deck that we have developed our own proprietary algorithms, we're creating our own database. So they had already realized the way that they're already putting it in their deck of establishing themselves that, look, we get it, everyone is using this AI, so we really want to emphasize we have something completely innovative. And I think that was great. At the same time, of course, to all of those startups, if you're using some features, it's okay to say that you're using APIs or you're using plugins. There's nothing wrong with that. But I think it's very important of how you really showcase in the deck already when investors take a look at it. Another key feature is, let's say that when we find an innovative startup, how do we really validate in terms of the technology? One of our partners, he's actually a very strong background in AI. He made a big exit back in the days to Nokia called Scalado. So he really knows, and he's been himself developing all the algorithms. So within the team, we have an expert that we can go to and say that, hey, I'm really a little bit hesitant, can you take a look? And I think this is a very, very key to actually have people who understand really from the beginning of how to really also look and evaluate on the decks. So that would be one thing for us.
And that applies to all technologies or features or functionalities, right? Having somebody within the team who's a specialist. But I think it's also worth pointing out your point about the deck. I mean, I've worked within this industry. The average deck gets, 2 minutes? And literally, that's all the time you guys have to look at it. So you really need to make sure that the language you're using up front and up top is going to catch the eye, because 2 minutes is not a long time. And for that note, please stop sending investors decks that are 50 pages long. That's a personal plea as somebody who has to look through them. Sarah, I'll come down to you. I know you had some thoughts on this area as well.
Yeah, I mean, I think the way that we kind of think about it at Antler is that we have a very founder-centric way of kind of looking at investments. I mean, we run residencies all across the world, so we bring together a highly curated group of high-potential people. We help them find their co-founder, and then we invest and we back the best teams. Even before that process kicks off, we have like tens of hours of screening of candidates. We look really favorably upon people that have built businesses before, successfully and unsuccessfully, domain experts in the space, technologists. So we really try and bring together this highly curated group of individuals. And then during our residencies, we work with them to help them double down on problem statements that they have. I would say, would mirror one of your comments, it's the broad majority of the founding teams that I'm working with right now are using AI or Gen AI to unlock, tackle a particular problem. And I think when it comes to our investment decisions, so in theory, we have built hundreds of hours of due diligence. And we really, not to simplify it down, but we kind of look at 3 key things. 1, team, 2, market, and 3, product. We over-index on team. We look at the composition of the founding team. We look at the individual skill sets and experience. We will look at, are they uniquely placed to kind of solve for this problem? Combined, are they a complete team? So do we have someone to kind of sell the vision? Do we have someone to kind of build the vision? And for us, I think that really kind of is the kind of the center point when it comes to the investment decision. Obviously, market, it needs to be a VC backable case. It needs to be a sizable market. Product, it's still in most cases probably pre-product. But again, for us at Antler, like the investment decision really centers around the team. And I think if you look at some of the interesting founding teams that I'm working with in London at the moment, again, many are kind of using AI to kind of tackle things. But One particular team is, broad and deep experience in the asset management industry. One of the founders was a senior executive there. They found someone to build the tech to really tackle pain points that they have identified in their kind of day-to-day work in the asset management industry as well. So super exciting things happening in that space.
And to continue the AI theme, I mean, we just talked there about how you're looking at companies that are using AI, but I think there's another area, another angle when we're talking about how you make investments, which is how investors can use AI. We just talked about the pain point of having 2 minutes to look at a deck and getting sent decks that are 50 pages long, and how do you sift through those, or how do you find the best companies to invest in? Do you think there's ways, or even are you using artificial intelligence when you're doing your due diligence and when you're hunting for companies to make your lives easier? Emil, I don't know if I'll come to you first on that one.
Yeah, this is a very interesting topic, and we're looking at this right now, how we can use tools to do it more efficiently. And of course, we have the quite time-heavy tasks of investing is the deal generation, like finding the right companies. And also, it seems to be possible to have fairly high quality in the market analysis of the companies you might invest in, looking at competitive environment, etc. So that is definitely going to be a optimizer for investment facilities and vehicles. Also, the due diligence process, looking at automating, let's say, tech due diligence and legal due diligence, at least parts of it, is going to make the entire investment cycle a lot more efficient. So we're kind of looking at it right now. There's a lot of people saying they can do it, so we're looking into who actually can provide value in that space.
Yes, again, it's another looking under the hood and actually, does this actually do what it says it does? Catalina, how about you? What are your thoughts on investors using AI to make your life easier, your job, make you better at your job?
I think ultimately at some point, AI can be utilized to help investors to make decisions, but I think that right now, personally, I don't really know how AI would help me to make that decision, because you're looking at a team. That's something that's intangible. And I know Sarah mentioned that earlier as a big part of how we do due diligence is we look at the team, and that's something that AI can't really help with at the moment. It doesn't have that ability. But what I would say it's great for is investors don't know every single product in the landscape or industry. So it could be helpful for market research and doing that due diligence, exploring what solutions there are out there on the market at the moment, what the needs are, what the demands are, and understanding, exactly what it is that this company might be offering. So I think that could be quite a useful application for it. But I do think that you still need that human touch. And ultimately, back to your first question as well, about AI startups. There's so many of them. I think that we need to remember that AI is not a USP. Every single company seems to be using that right now, and that's not really the way forward. I think that AI could be utilized as an enabler for what your company is trying to achieve, but it shouldn't be what your whole company is structured around. It should be just a small part of that. So hopefully that's shed some light on that.
Yes, please.
Yes, and to continue on that, in a few years, AI is just going to be software that is better than what software is today, right? So it's important to realize that it's the utility case, the application of software, including AI, that matters, and not only AI. I think that's important to remember.
Yeah, the point, I don't know again who was here yesterday, but Benny, who was supposed to be in this seat, was talking about the fact that it's just a technology. It's how you use it. The internet is just a technology. How do you use it? That's the important question. And that's what companies need to be able to show to all of your points. So we talked about the how. I want to talk a bit about the when. Now, originally, when I wrote this question, I was going to say, everything's slowing down, are investors being more cautious about the point at which they invest in a company? Are you taking longer to make decisions? But then I spoke to my panelists, and I know at least two of you are like, nope, we're actually picking things up. So I'm going to come to Sarah, on you first on this, because you mentioned it in your introduction.
Yeah, absolutely. So definitely the contrarian view to everything that you see in the headlines. But I think Antler is probably one of very few investment funds that are doubling down on, the tech that is emerging, but also the number of founders that are coming to kind of start new companies. And I think we're probably one of few in this year that had increased the number of investments and will continue to do so as well. So, I mean, I work for the UK fund. We're almost fully deployed out of the first fund. We're actively raising for the second fund. So we're going to do many, many, many more investments, both in the founding teams that go through our residencies, but also directly invest as well. I also think one particular thing that really kind of goes into that in a little bit more detail, we actually published the European Founder Report earlier this year, which was the broadest study actually of European tech founders in Europe, which actually unearthed some really, really exciting things. There's an influx of highly top talent, but also highly experienced startup operators that are going out and starting new companies. So you'll probably think of like the N26s. I know there's a couple of people here from some fintech unicorns out of Germany. Again, there's the kind of
mafias they're called, aren't they? The N26 mafia, which we think we need a new term for that. But yes.
No, absolutely. I think there's a couple of terms that are banded around, but absolutely, there's the Spotify mafia in the Nordics. Revolut, I think there's so many founders that have again been part of like senior executive roles and have spotted an opportunity and gone out and kind of built new things. But I think one other thing that has been interesting from our studies for the European Founder Report is that there's a huge number of, I guess, tech founders that are emerging, but also the diversity of founders that we're seeing is much greater as well. So more women starting companies, more tech founders looking to kind of find their co-founder and build something. So I'm super positive about kind of like the influx of founders that are starting new companies and the future ahead.
Caritta, am I saying that right? It's Caritta. Yeah.
Yes, that's correct.
Halfway through the panel, I should have checked that beforehand. And what about you? Are you seeing different stages that you're investing in, or are you? I mean, you're quite focused on early stage, right? But is that changing with the current climate?
I think one of the change that I know from also my team, it is that because we invest from pre-seed, let's say to Series A, is that I would say that most of the deal flow, maybe 70, even to 80%, is pre-seed. So which is showing that there is a lot of startups getting started that are doing the very first investment rounds, which is at the same time, which makes it also trickier because they're very, very early stage. And if you look on the Nordics, one of the key trends, especially in Finland, is around deep tech. We have a lot of amazing deep tech startups. But at the same time, when they're very early, very research heavy based, it makes it also for us hard because we're looking to have some type of traction already in the space when we do the investment. So this is definitely a key trend right now. Another one I would say is definitely, in addition to deep tech, is obviously climate and sustainability. Like even though the funding has reduced, let's say to the previous years, but that's pretty much the whole market, I would say in general. But there is much more startups coming from Finland, from this sector and also in the Nordics. So now we haven't done really investments on this space yet, to be honest, but right now we're very heavily looking into that. So I think that's quite exciting to see as well, that there are completely new type of trends that are getting born.
And I think the interesting point when you're that early as well is you're actually investing in an idea or a theory or, as you say, research. There isn't actually anything, and making that decision can be incredibly difficult. So, you know, it's a smaller amount of money, but actually a more difficult decision. Catalina, how about you? Are you investing at different stages, or are you taking longer to make decisions as a result of the climate, or actually has nothing really changed for you?
I think it's a really difficult question because I can only speak for myself. But in the general broad landscape, I think that because there's so many startups now, there's more startups than there's ever been before, that maybe might mirror on the fact that it looks like perhaps there are less investments around, but really it's just the demand and sort of the increase in capacity of all of the startups that there are. So I have two different arms. I obviously have ELIXR, which we're focused on that early stage tech ventures. But then I also advise a climate tech fund, which, as Caritta mentioned, is a huge market right now. And I know that the UAE, for example, I've just been at COP28. I don't know if anybody in this room has been, but they've just announced a £30 billion climate tech fund. So you can see that the shift is already happening. I mean, it's been happening, but we're really trying to move that capital into climate tech to showcase and bring a lot of our sustainable development goals to fruition. So I'd say, in summary, that there are more startups than ever before. I would say that also because of recent frauds and things like, there's a lot of people, you've got like WeWork and whatever that DNA company was, all sorts of different frauds going on, that investors might be a little bit hesitant to invest perhaps. And of course, the collapse of AI once ChatGPT announced all of its new developments, then of course that kind of saw a decrease in trust in the AI landscape. So I do think that there might be a little bit of hesitancy, but ultimately I do think that the demand of the actual amount of startups versus the capital that is available could be potentially where that question comes from.
It's interesting to your point about fraud and that, investors getting their fingers burned. Obviously, in fintech, the biggest one we had recently is the FTX scandal. And when you hear about what happened there and how my brain would go, who would give that man money? But, that happens, accidents happen. And the point is, when it happens, it affects the whole market and everybody just has to stop and think for a minute. No matter how good you think your own due diligence is, you do just want to pause. And I think the other point, you both mentioned climate tech and you mentioned deep tech. I think one of the things we shouldn't forget is that fintech touches every industry. Every industry has to deal with finance. Every industry has to deal with money. So all of these, finance will weave its way through every industry, which is why fintech ends up taking such a huge chunk often of overall funding, because a lot of companies touch it and it kind of depends how you classify them. Emil, you have the corporate perspective here. Are you seeing a sort of a change in when investments are being made, whether that's through to stage or whether that's kind of in terms of taking a longer due diligence process?
I would say that corporates in general don't really think about stage that much, and when they invest and ultimately might acquire, it's for a strategic purpose, right? And what we do see is that it's been quite a lot of corporates that started corporate venture capital funds throughout the years. And some of them invested at quite high valuations, and now they're questioning, was that a good idea, right? On the other hand, they are also looking at investing in or acquiring startups and scale-ups as a way to do quick product development, because they have a theory or a hypothesis that valuations for these startups right now might be lower, which also might be the case. And in general, the less capital these corporates can invest in order to obtain the strategic position they want to have, the better. So I would see that discussions are usually around seed stage and potentially Series A.
Yes, I mean, corporate venture capital has actually sort of held quite well when everything else has sort of dipped. PE's dipped, VC's dipped, but CVC actually seems to be holding firm. And I do wonder how many large organizations are out there looking for bargains, cheap fintechs. To your point about, product development, can't build it, but that's cheap, I'll buy it and see if I can integrate it that way. Obviously not always the easiest thing to do, but definitely an option. Okay, so we've done how, we've done when, now we're going to do where. As you can see, I structured my panel. I was very creative in my structure for this one. So there's two ways we can look at where. The first one is geographically, which we'll take first, and then the second one is kind of, to go back to my point about segments. So geographically, we have seen a lot of money go. There's so much money in the US. There's a lot of money in Europe, actually, if we look at kind of, the UK certainly, and then you're looking at kind of like France and Spain. But where do we think the money's going to go next? Caritta, I know you have some thoughts on emerging markets, so I'll come to you first on this one.
Yeah, perfect. I think even before thinking of emerging markets, I was in Slush last week, and something that I really realized, which was actually very positive, especially for the Nordics region, is that quite a lot of VCs and funds right now, they are really looking into investing into startups in the Nordics. So they haven't done much of investments in the region yet, but it's becoming much more appealing right now. I think it's due to a lot of the regional, also geographical location. It's very stable, there's a lot of innovation. The governments are extremely supportive.
Your point about stability is so important right now.
Exactly, and that's one of the key things what investors are saying, that they're really looking for stable regions where there's a lot of innovations taking place. So this was a very positive notion, which means as well as great news for startups. There's definitely money that investors want to invest. The challenge there is that how to find the quality startups. I think this seems to be a lot of the biggest challenges, why a lot of VCs, I'm sure Sarah probably also agree, I met with Antler as well, a lot of VCs want to be doing co-investing. That might be one of the trends also that has changed a little bit more than in the previous years, that's also how to balance the risks. In terms of emerging markets, although we've seen a major drop in the investment, especially in the fintech, I think that has been like probably on the bottom compared to many of the other sectors. In Africa, fintech is actually still the #1 sectors, to be honest, where it's really investing. So it is really growing. The amount of exits as well that we've been seeing the last few years in Africa alone, they've been actually increasing. They've been doing better in comparison to the rest of the world. in general, which I think is an extremely good, positive way. Obviously, the exits are around 100 million in general, which is much lower than in the Europe or USA. But this is to show that there is a definitely very vibrant ecosystem going on. There's a lot of new funds. I personally know, like 2 of my friends, they closed a fund in Nigeria, 20 million new fund, just like 2 weeks ago, investing into fintech startups across Africa. I know another friend, they're closing right now another fund in Africa for 50 million as well, investing into different startups across the sectors. So regardless of the trends, or let's say the negativity that we keep hearing, at least personally, I am seeing a lot of positive news, and emerging market seems to be growing as one of these regions as well. And I think that is the fact that a lot of people want to be investing and having more diverse portfolio, not relying anymore on the more traditional markets that we see, but actually going into completely new type of markets.
Yeah, absolutely. I think Nigeria is such a vibrant place when you look at fintech. Excuse me. So creative. And also Africa is huge, right? There are so many countries, which means so many problems to solve, and therefore so many opportunities. Catalina, I'm intrigued. You said you were working in the UAE and doing some work in Dubai. Is that a market you're seeing a lot of vibrancy in kind of the startup scene? And is that somewhere that we're going to see more money going towards, do you think?
Yeah, absolutely. I think everybody's wanting to move to Dubai right now, so it's definitely an emerging market. I'd also say Africa, however, I mean, maybe I'll come back to touch upon the UAE, but Africa's a huge global movement, especially being at COP28. We were talking about, you know, moving money from the global north into the south, and of course Africa is a big, big focus for them. With a £30 billion climate tech fund that's been announced and multiple other funds. I know, as Caritta said, there's so many more funds being announced for all sorts of different regions, but Africa in particular has got a huge, huge, huge involvement. And we've just taken on a portfolio company ourselves based in Africa. I think that before, perhaps with corporate investors, they might have been a little bit wary of investing into Africa, but unsure, that sort of trustworthiness, that seems to be a thing. You know? But actually now that we've got you know, ESG is a big focus, the S, focusing on the social side of things, we do need to be focusing on how we do you know, reduce those inequalities, SDG number 10. So because of that, we're seeing a shift into the African markets, huge shift. I know 2 funds around me, I think one's about 50 mil and one's 100 mil. They're all purely focused on African startups themselves. And actually the company that we've just invested into is helping to pump more capital into the African markets and helping African creators and creatives to get more opportunities. So I think Africa's a huge market. UAE, of course, I think the shift has already happened. I think Africa is pending and is in that sort of interim period, and we'll start to see those shifts around there.
Yeah, I mean, I think the interesting thing about the UAE and a lot of the Middle East is that, particularly when you're looking at fintech, a lot of their legal and financial systems are based on the British system for reasons we won't go into. But it does mean that when you're building a fintech, they almost have a model. And in fact, their regulators look at the British regulator and think, oh, we might copy what they're doing. So if you have experience working in the British market and then you look to the Middle East, actually it can really help you if you're looking to start particularly a fintech business because you've already done some of the work. Sarah, I know Antler's global. Is there anywhere in particular that you're seeing a lot of activity right now?
Yeah, I can probably draw on 2 experiences actually. I've been with Antler for nearly 3 years, but most of my time has actually been spent in Berlin. I think there's a few Berliners here already. And I knew absolutely nothing about kind of DACH and Eastern Europe and the tech ecosystem really that exists there. But moving to the city, the city is like incredibly international. It's a super vibrant city. But I think there definitely is a concentration of increased amounts of capital, I think, going there for early stage tech companies and VC. Return to London, I think absolutely London in many, many different ways is the centre of the world. I think climate tech has actually surpassed the levels of funding, I think, for fintech as well. But I think for somewhere like London as well, absolutely historically and traditionally has been concentration of talent, concentration of capital as well. So incredibly exciting, I think, as a founder starting a company, but also as an investor as well. So two individual spots that I kind of...
Yeah, I mean, I think I am so pleased that London has managed to hold on despite the government's best efforts to, you know, I won't get too political, but London is holding on in there, it is holding its own, and it is still a place where founders choose to come and start their businesses, so it is still attracting money. Emil, I know you're mostly sort of Nordics focused, but are you thinking about looking more globally? And if you were, is there somewhere particular that you'd go, actually, that's where we're going to take our next steps?
Sure. I think that the main hubs are going to maintain, as they tend to do, because talent wants to stay, and talent is what matters when it's early stage, right? What I'm hearing whisperings about is, though, that as demand for tech talent in these hubs is getting a bit lower, as larger and smaller tech startups are not hiring as much, some of this very well-trained talent might move home to their home markets, wherever that might be. So there is a hypothesis that we might see emerging tech activity on those markets, and that in theory it would be an arbitrage for investors to have less competition for investing in these great companies run by great talent even there. And I think that's interesting to look into.
Yeah, that's very interesting to see where, as geopolitical shifts happen, people move to. So we saw a huge influx into in Europe, into Lisbon, into Portugal a few years ago because of incentives by the government, and also you look at Lithuania, a huge amount of activity happening out that way as well. So that's a really interesting point. Right, we have 4 minutes and 18 seconds, which means it's going to be a very quick fire. Where is the next interesting area of fintech as far as you're concerned? So we know that climate tech is an area that's of interest to everybody right now and coming up, in deep tech. But is there anywhere sort of financial specific or even financial adjacent that you think is going to be, right, that's the next one that's going to bubble up? Because, for example, AI is not fintech, but it is fintech adjacent. So Sarah, you're nodding enthusiastically. I will come to you first.
No, I think a flood of ideas have just kind of spilled into my mind. I think I'm always reminded and humbled from working with founders from essentially the moment that they decide that they want to build something, of the plethora of problems that need to be solved in the industry that I kind of grew up in. So, I mean, as background, I work for some of the big financial institutions and spotted inefficiencies and I think pain points all across the organization, and now, like, fast forward to now, I get to kind of work with them with various different founders to kind of to solve for them. But I think I mean, I tend to really like the boring parts of financial services. So anything in the insurance industry, in the investment management industry, I think there's still, I mean, quite a lot of a lag of innovation that's really hit that part of the industry. But also, I think there's, the opportunity is really ripe to kind of solve for various different problems. So again, I referenced an individual founder that I was working with. He's identified, compliance spots in the investment management industry, and I think there's still, because of this surge of innovation, a ton of stuff that we can solve very quickly. So really excited about all of the boring parts of the industry to be solved.
I always say that the unsexy stuff is the stuff that will make you money, actually. That's the way it works. And I love a little shout out for insurance. I have a soft spot for insurance technology in my heart, so thank you for that. Catalina, how about you?
Yeah, I think neobanks, of course, is a great place to start. I think the digitalization of multiple banks like that is so much easier for the consumer. I'm a lover of Starling Bank and Revolut, for example. I had a Barclays Bank account before, and it was just...
I thought you were going to give a shout out to Barclays then, and I thought, well, that's interesting.
No, quite the opposite, actually. I love Barclays, but then actually it just makes things so much harder when you've got to go into branches and you've got to carve out time, and especially as a business owner as well, you don't have time to go in and go in between 9 to 5 hours. It's just unheard of. So I think that could be a quite a big focus in the market, but actually on the opposite side as well, instead of like where things are going, where things may be detracting from might be the buy now, pay later. I think there's a lot of skepticism and criticism around that particular market, especially from a social point of view of people going into debt. So yeah, just to summarize, love neobanks, don't like buy now, pay later.
No, that makes sense, and particularly we've just seen the US regulator come out this week with new rules on what they call pay in full, but it's the same thing. It's in the global economic climate that we're in, how ethical is it? And investors are obviously aware of where they're putting their money and how it reflects on them and their ethics and their morals. Emil, how about you? What are you looking for in the world of fintech?
Yeah, so I think the investor sentiment, and I might agree, is that banks are pretty good at keeping customers. So there is less appetite, I think, for investing in B2C fintech because it's expensive to get consumers right now. Instead, B2B or enabling banks and other players with a broad distribution network, a strong customer portfolio to differentiate their offering and tag along on that journey, right? And this also goes to payment processing, moving towards commoditization due to a lot of consolidation of companies. Maybe one should focus on the value-added services that help the players that have the customers win in their markets. I think you can pretty quickly get a lot of traction that way.
Yeah, B2B and B2B2C seem to be the areas that, whatever technology or whatever industry you're looking at, people are focused on. And Caritta, how about you?
Just to finish it up on everything they have said, but I think something for me is about the financial inclusion and how you can really combine and see, as we said, emerging markets, major growing market, but that also means that with different, digital payments of how to access different payments also in the more emerging locations, how to combine also sustainability, energy, access to internet in order to take payments in all around the world by closing the digital gap that we have and making sure that everyone can have access to financial services. I think this is an extremely interesting topic, and I feel that a lot of startups, they should be exploring definitely more of the outside emerging markets. That's where you can truly, truly solve a real problem, which is something I would love to see always in startups in general, and also to really, really tap into a majorly growing markets.
Yeah, absolutely. I think financial inclusion gets talked about a lot, but we have not made anywhere near enough progress in solving it. Thank you so much to my panel. Hopefully a more positive spin on the world of investing. There are a couple of people here who have money to give to startups, so if you are looking for money, I suggest you go and find them or find them on LinkedIn and have a chat later. But thank you so much to my panel, and I'll let you go and get your coffee. Thank you, everybody.